The stock and crypto market are making all-time highs. This is the weekly market forecast. Today we're going to talk about what's going to happen in the next couple of weeks. As you guys heard, there has been a lot of news going on this week in the US Capitol, but at the end of the day, Biden is taking office and January 20th, that's his first day in office. Now I want to point this out. This article came November 10th saying that, hey, the dollar could weaken further under a Biden administration. Now, this is interesting because we're about to see Biden starting, and the first thing he's going to do is start printing more money to get the US economy going. As usual, we're going to discuss about all the markets coming up after the intro. What's up, guys? This is JC and welcome to the Wealth Engineering channel. It is imperative that we learn how to manage our money, because once we learn how to manage our money, we can take control of our true wealth, which is our time and our freedom. This is exactly why in this channel, we pay attention to everything that is crypto and stocks related to find the best investment to grow your portfolio. If this is something that interests you, I want you to smash the like button, subscribe, and click the bell. If you're new here, thank you for your support. And to my subscribers and everyone who signed up to the Technical Investor course, welcome to the Wealth Engineering community. I have interesting links in the description below to help you start on your financial education journey. So make sure you check them out. With that said, you came here for the truth. Let's just dive deep into it. All right, first I want to start with the Fear and Greed Index. Now, a wise man once said, when everyone starts to be greedy, you starts to be fearful. And this is exactly the philosophy that I have in mind right now, because nothing really makes sense, but the market is actually making all-time highs. And yet we have reached another all-time high this week on the S&P 500 and NASDAQ. On a technical perspective, the charts are looking more and more bullish. However, there is something that we need to be careful. First, remember, hey, Biden is about to take office. He's going to start printing a lot of money. We don't know how the market is going to react with that. But usually in Q1, whether in December, January, sometimes even in March, we can see some correction in the market. And when we see all-time high like this, it's been going on for a lot of weeks, maybe we should start looking into getting ready for a dip. Now, remember, I've been talking about the bearish divergence that's been going on for years. Now we're about to retest this again, and it's very easy to see on a weekly chart. On a weekly chart right here, look at this. We're very close to a retest of that line right here. Now, if we get a line to touch this and reject this line right here, we can expect to see some major dip, and we're very close to that decision point right here. If we cross this line, we're actually not out of the waters yet. The next step after that would be to create a high that is higher than this one right here. So that's very interesting to see as well. So we have two things to look forward to before we can really seal that bull market and a new all-time high for the market. But the thing that we should definitely look into is this retest right here, because the RSI is about to check this downtrend line. And if we cross this, then we can expect to see all-time high all over again throughout Q1. If we do not cross this and we reject this, then we can expect to see some dip. So all eyes on this move right here. And this move might take 1 to 2 or even 3 weeks before we have a clear picture at it. But as of now, on the short term, we can expect to see more bullish action. So this is the chart for DXY. And if you're new here, the DXY is a chart that compares the US dollars with a basket of other world currencies. And it's a way to figure out where the US stands when it comes to the world. And US is actually the world monetary currency, the currency that is used to transact the number one master resource, which is currently oil. All right. So it's a very big deal. And when this chart goes down, it's actually very good for cryptocurrencies. It's very good for gold and sometimes stocks. And right now, when the chart goes up, it's very bad for cryptocurrencies, bad for gold. The reason why I'm saying this is when you look at this chart, this week right here, we had a very bullish sign. And also, we had a retest on that support line right here, the price started to bounce back up, and then we had to retest this line right here, and it's looking like we're about to cross this as well. And if we start having couple daily candles that are closing above this red line right here, we can expect a short-term rally where the US dollar is going to start meeting that EMA 21 weekly average price. But I'm still bearish long term. I still think the end destination for the US dollar is at least testing that red zone right here. That could happen sometimes in Q1. And when this happens, we can expect to see also more correction on the market. But so far, we're very close to that point. And on a short term, we're looking slightly bullish on this chart, which means we can expect to see some correction on the crypto market, which has already started. Now, when we look at the indicators, we also have a clearer perspective of what's going on. Now, something to keep in mind is we're looking at the double bottom forming here. So that's very interesting because the double bottom is a trend reversal. And a trend reversal, which means the downtrend would be starting to reverse itself. So it's interesting to see if we're going to hit that green line right here, or if we're going to start rebouncing from that major support right here to get up. But as of now, the MACD is still bearish with momentum on the low side. And the ADX is still very bearish with the strengths picking up. So when the yellow line represents strength, the red lines represent bearish, which means the prices are expected to drop lower. And the green line represents bullish action, which means the price are rising. So when you see the red line above the green, it's bearish. And when you see the green line above the red, it's bullish. But right now, the reds are above the green, which means the price are expected to go lower. And the strength index is picking up more strength, pointing upward. So which means the next couple days, even weeks, we might see some more bearish actions. When I shift this on the daily, it's the same thing. You see the strengths are pointing upwards with the red line above, but the gap is getting closer. So that's also interesting. The gap is getting closer. You can see on a daily, the bounce had already happened and the rally upward for the US dollar is happening. So maybe we already started that momentum on the upside, but I still say that long term, based on what I see, I still say long term are still bearish, and we might even hit this line at the end of Q1. Now, this chart right here is the crude oil futures. I've made a video 2 weeks ago about this chart and showing you guys that we're about to reach a decision point for this chart. And I said that, hey, once we break this decision point on the upside, oil stocks are going to start booming. This is exactly what happened this week. This week, we finally broke above this green line right here with a very bullish candle. And then we started a pump all the way to the next resistance. So what I'll do now is I'll remove this line right here, and I'll also leave the link where I discussed about that on a previous video. I'll leave a link somewhere in the top. You will make sure you check it out. It's gonna make you understand why I do this. I do this so that we can identify on the market what's going to happen, so that we can go ahead and select a stock in particular and start riding that momentum as it happens. So for example, my go-to oil stocks is XOM, ExxonMobil, and a move like this is a move that I would love to play on an option trade. For example, I would play it for 30 days, 45 days, and then as it happens right there, it's boom, it's quick money right then. That's how I trade on swing trading. But you could also look penny stocks if you don't have much money to invest, and go find penny mining stocks and try to ride that move as well, because they might have a reaction based on this. If the crude oil futures price as a whole increases, then it's going to affect every business related in all industries. So it's the same thing for gold. It's the same thing for cryptocurrencies. It's the same thing for the stock market. So things like this, once you understand how it works, you can ride it and know how to position yourself to take advantage about it. So with that said, Make sure you check this video out. It's going to help you understand. I know I've been receiving a lot of messages and I've been having a lot of subscribers lately. So check these videos out. It's going to help you understand further. Now, on the short term, what we're seeing right now is we're seeing a double top. This is different than the previous chart that we saw. Before, we saw a double bottom on the previous chart. Now we're seeing a double top. And a double top is a reversal pattern. It means the uptrend that we've been starting is starting to reverse, and we're about to see a different trend, a reversal trend. And the trend that we started to see is a rejection on that big resistance right here. And it's possible that, hey, as this RSI is dropping all the way to 50, we might see the price dropping and play around that zone right here, the next support. So, hey, whenever the price breaks its previous resistance, it's going to find its next resistance. And this is the line right here. When it rejects the resistance, it has two options. Either it's going to retest this resistance until it breaks it, or it's going to drop until it finds its next support. And I think what's mostly likely to happen is a drop on the price on the stocks right here, just for a correction, because it's been pumping for a while until it's finding next support and start pumping again. So we might very well see this. It's ironic that we're seeing this right now because, hey, Biden is about to start and he's super green. Lately, crude oil has been on a rampage and it's bringing a lot of stocks up as well. So that's interesting to see. This is the chart for gold. We've drew this line right here to show you the channel where the prices were stuck. And until we break this channel with a clear bull run, then we're going to see this pattern repeat itself over as it's going down. And this is exactly what we've been seeing. Now, this is very interesting, and this is called a fake out. Something to pay attention to. This channel right here, you had a very huge candle to break the channel. So let's say you did not know this and you were following it like here. Fake out with a big candle right here. Most investors, they would see this and they were like, oh my God, it's time to start investing in gold. But the key point I would say is look at the candle, look at the RSI. The RSI is very close to the overbought area, the red zone. That's why I pointed in red, because once you start seeing this zone right here, you should start seeing into selling. You should start thinking about selling. And then you didn't know what was going to happen in the future. You see this giant candle right here, which symbolizes strength, which symbolizes, hey, we're about to break this downward pattern to go up. Technically, that's true. But when you add this to the RSI that is very close to the oversold, that you know this is not sustainable. It doesn't have enough strength to really rally up. And that's why it's a fake out and it goes back in. It goes straight back down. It goes lower than 50. And what we also see is we also see a momentum on the downside starting on the MACD with a bearish cross. Something like this. When you see the blue line below and the orange line above, this is bearish. You got a giant red candle right here. And then usually it doesn't just have one. It's going to have 1, 2, 3, even more. And it's going to build momentum on the downside. So we can expect to see next week more bearish price for gold. And that means we're looking at gold with the US dollar an ounce. That means mining stocks are going bearish. So if you want to invest, so if you want to play that with options, looking to put options on a short term as it's riding its way down. Now, on the other hand, once it hit down, it could also start bouncing back up again. And just like it did here, you might have a bounce up to this point. And if we have a nice break, then we have a nice clean ride all the way to $2,000. So these are the things to keep in mind. Whether we put it on a weekly or we put it on a daily, the signs for gold are still bearish on the short to medium term. I like that gold is still staying on the 50 line on the weekly chart. That's good, because once we break below this line, then that's a very bad sign for gold. So right now we're still there. I want to see a couple weeks there while we stay there on this line. I would say 2 weeks. If we could stay on this line for 2 weeks until it pick up strength to move back up, that would be perfect. That is something that we still need to see. and we'll wait out. We'll see how that goes. This is the chart for Bitcoin. We've been getting all-time high the last couple weeks. This is very exciting. A lot of people have been looking into Bitcoin lately, but hey, there is something I want to show you guys. The last time we had a bull run like this, we hit the RSI. The RSI passed the red zone and it stayed high for a very long time, but we had many corrections along the way. And you can see some of this correction on the weekly chart. They break here and they go start all the way on the 50 line, and then it goes back up again. So all that to say that, hey, now we're maybe at the end of a first ride of that bull run, and we may be due for correction, and this correction may happen. Now, we're looking at the US dollar with a potential rally on the upside. That could also bring the crypto price on the downside, starting with Bitcoin, and that could also create a short altcoin season before Bitcoin start rallying all the way up again. So this is something to keep in mind. You see there was multiple times that we hit this white line right here, which I'll even put green just so that we can distinguish that from this line right here. And we see that we hit it. We even passed it a couple times, and we had correction that was all the way down near 50. Now, I would say around 60, that would be a perfect point to start buy it back again. So keep that in mind as you're buying cryptocurrencies. You got to make sure you time your buys very well. It's not all the time. You don't want to start buying at the top right away and then having to go through the correction. But hey, if you're very educated in cryptocurrencies and you don't mind holding it, by all means, start buying as much as possible. But I would definitely say, hey, what we can expect to see on the next couple days, even weeks, is correction. And we might definitely on Q1, we might see correction. We might see the price rebounding back on that support right here, which is near 20,000. But I think what we're most likely going to see is the price are going to stay stable around 35 to 30,000 before it starts pumping back up again for Bitcoin. So if we put it on a daily, we can see that this type of correction already started happening. This is a good news. I want to see this RSI for next week. I want to see it go a lot lower than this, definitely lower than that red zone right here, and then closer to 70. If we have this, then we're going to have ideal buying point for the bull run for cryptocurrency. So get ready for that. I usually make alerts on this channel as I'm making weekly market forecasts. So my alert for cryptocurrencies is, hey, your Bitcoin, start allocating them, maybe some of them into altcoins, but definitely start getting your savings ready because you're going to have a buying point, a dip. There will be a correction, a dip. The price may not go that low, but when the RSI is like about 60, just around 60 and below that, this is when you buy. You buy when you have a bull run like this. You don't wait for the price to go all the way to 50, even lower than 50. You start buying as soon as the price are around 60, and you buy it all the way down. And that's what I'm saying. Wait for your buying point. Try to stash up your cash. Get ready for it, but it's coming and it's already starting. We're seeing the signs right here, and we have to wait until next week to see if we at least reach that red zone here and how the price is going to react around this line right here. With that said, this is all I had ready for you today. We'll talk on the next video.